Well, the trade gap has been growing quite substantially for a number of years. In 2006, it was about $230 billion and represented a pretty large chunk of the overall U.S. Trade deficit, and it will be much larger in 2007. It's very difficult to measure exactly what the impact is on the domestic economy in the United States. We've been growing fairly rapidly. We have fairly high levels of employment, so one interpretation is that we're doing quite well despite the trade gap, and that we're getting a lot of benefits from lower cost goods. The Chinese are lending us a lot of money that are making our interest rates lower. So it's a complicated balancing of different factors that have to be taken into account. Well, their undervalued currency, and I do agree it is significantly undervalued, makes Chinese goods less expensive in the U.S. market, and it makes our goods more expensive in China. So naturally it tends to increase the volume of our imports from China and reduce the volume of our exports from China. So other things being equal, a more undervalued exchange rate is likely to lead to a bigger disequilibrium. For China, though, the real problem is that their global current account surplus, that is their overall trade surplus, has become absolutely enormous. They now have the world's biggest trade surplus in dollar terms. It's a staggeringly large amount and continuing to grow very, very rapidly. So for those of us who are concerned about global economic imbalances, we have two countries we should focus on: the United States, which is the biggest global deficit country, and China, which is the biggest global surplus country. Well, I think it's both a political issue and an economic issue. It's an economic issue for the reason I just explained, and it's fairly clear that China's not allowing market forces to work in terms of the value of its currency, because the central bank of China, the so-called People's Bank of China, is intervening in the market. They're buying up in recent months almost $50 billion a month. That means they're selling domestic currency, which keeps the price of the domestic currency down. So it does have these economic effects. It also has political effects, because the natural reaction in many countries around the world, including not only the United States but in Europe and Mexico and some of other countries, is that China is manipulating its exchange rate to gain an unfair advantage. So it becomes a very sensitive political issue as well. This is not the outcome of market forces, in other words, because the government is intervening so heavily in the market. The currency manipulation charge process takes place within the International Monetary Fund, and different experts have varying opinions about whether or not China should be named as a manipulator, and there are a number of technical issues that are fairly complex. From a common sense point of view, I think you could say they're a manipulator, because they're buying up so much foreign currency to prevent their own currency from appreciating. By the end of June of 2007, they had about 1.3 trillion U.S. dollars in foreign exchange reserves, which is far, far and away the largest amount of any single country. I think it is fair to think of the Chinese economy as a hybrid economy, or an economy in transition away from a planned economy that they had 2 or more decades ago towards a much more market-driven economy. But it's not a pure market-driven economy. And the exchange rate is certainly a very good example of the way that government is still intervening. They still have very strong government industrial policy in some sectors, for example. And that creates, I think, tensions in the political side of the relationship, because when China has a large surplus and we have a big deficit, the worry is, or the concern is, this is not really being driven by market forces. It's being driven in part by government actions in China, and that creates expectations that they should take necessary steps to alleviate the problem. The reality may be more complicated, though, because it's hard to figure out the exact mix of market and government forces in any given domain. So people disagree about, to what extent various problems are the result of government intervention versus the market. If you had a more purely market-driven economy, then we wouldn't be spending so much time on that argument. I think this is one area where they've done extremely well. China has attracted huge amounts of foreign investment, and there are relatively few restrictions on investment, particularly in manufacturing. There are more problems in services, in financial services, for example, where there are caps on foreign ownership. In certain professional services, there are certain limitations on what various professionals can do in China. But in plain vanilla manufacturing, this is one of the most open economies to foreign direct investment, and they've attracted several $100 billion in foreign investment, most of it in manufacturing. And those foreign firms do contribute very significantly to China's export growth. So it's been a pretty successful program from the Chinese point of view, and it's been very, very rewarding financially for many of the foreign companies that have invested there. A lot of this trade and investment activity, outbound investment activity on the part of Chinese companies, is related to natural resources, oil and other and minerals and so forth. And China has moved into some countries where the United States and many other Western countries have withdrawn out of concern for the nature of the political regimes or other reasons. And of course, the Chinese have been rightly criticized in some occasions for the policy that they've been following. But I think, on balance, from their point of view, they do want to secure foreign sources of oil and minerals in which they have domestic shortages. They're making investments. They're signing long-term contracts. And they're being pretty aggressive domestically in these countries in order to achieve their long-term economic goals. You could point to several things. One is the openness of this economy, not just on investment, which we talked about, but also on trade. China imports, relative to the size of its economy, immense amounts of products. The ratio of their imports to the size of their economy is about twice as great as it is in the United States. It's many times larger than in Japan. So from a trade point of view, it's a pretty open economy in the aggregate. Now, there are some sectors they do protect. There are a few tariffs left that are high. But I think many people have the impression that this is a relatively closed economy, and that's why they have such a big trade surplus, not only with the United States, but globally. The reality is more complex. They're pretty open on the import side. Yes, their currency is undervalued, but the reason they have such a large surplus is the tremendous growth of their exports. But their imports are also growing at a very, very rapid rate as well. So it has been our fastest growing large export market for more than a decade. Our exports to China are growing much more rapidly than any other country. And I think many people have the idea that the deficit that we have in our trade with China is a result of the fact that their market is fairly closed, and that's simply not the case. I think we have to look at the situation very carefully. They are one of the biggest holders of Treasury debt, but also lots of other debt, corporate debt, other kinds of dollar-denominated U.S. financial assets. And as I mentioned earlier, it does help to hold down U.S. interest rates, so that's a benefit. They potentially have some leverage, but it's easy to overestimate the leverage they have. If they were to begin to diversify very substantially, the dollar would fall in value, and those holders of dollar assets in China, whether they're official or private, would then suffer a substantial loss on their investments. Some people say the real situation is closer to the codependency relationship between a drug dealer and an addict. The United States is the addict. We spend more than we produce. We have to borrow a lot of money to keep our spending habit going, and the Chinese are the dealer. They lend us the money so we can buy the goods from them, and they produce more than they consume. And so the result is this symbiotic relationship, if you want to call it that. And it's very hard to say that one side gains more leverage over the other as a result of that relationship. The strategic economic dialogue that was initiated in 2006, I think, is a very, very positive development. It provides a forum for the United States and China to focus on issues that are long-term and strategic in nature, as the name of the dialogue suggests. many times bilateral discussions between the two countries very quickly get down in the weeds on very particular issues. They can absorb a lot of time, and you kind of lose sight of the bigger picture. This is a dialogue that's designed to look at the broad scope of the relationship and take a long-term view. So I think it's very, very welcome. Of course, it's been criticized by some who've been disappointed that it hasn't solved a lot of short-term problems, whether it's the currency, Chinese violations of intellectual property rights, and a number of other issues in the bilateral relationship. But I think that's the wrong metric. The right metric is this longer-term, more strategic perspective. There are lots of other dialogues that are ongoing that have the responsibility for dealing with some more immediate short-term issues, and that's where those issues should be taken up. So this is an excellent opportunity for the two sides to look at these long-term strategic issues. In global warming, climate change, energy, for example, are key issues that are getting high-level attention in this dialogue. These are very long-term issues to which we will not be able to point to solutions anytime in the foreseeable future, but maybe they'll move us in the right direction and we can make some progress on these issues, and I think that would be a very valuable contribution.